Morning everyone. Welcome to the last webinar of the year. And it's been quite a year. I hope you've had a good one. It's been a roller coaster ride, and let's get into what's been happening, what might happen in 2022. Let me share some slides and we'll get into the market straight away. Okay, so right now we are living through a little bit of a storm. We have the Omicron variant, seemingly sourced here in South Africa, controversial. And we've also got Jay Powell, who is reinstated as the head of the Federal Reserve, saying that inflation is maybe not, in fact, not transitory. We've been saying that for a little while. And high inflation will be with us at least through all of next year. And that has really spooked markets. So you can see the year to date, this is the S&P, the NASDAQ, Dow Jones, all up about kind of 15, 20%, and they've come off basically 4% off the top based on the news just within the last week. We'll get into all that in a second. As you know, we've been talking about for a little while, the market does sell on quite an extended valuation. So you get these bits of bad news or big bits of bad news, and it clearly has an effect on the market fairly quickly when you're at extended valuations. This is the price to sales in white and the price to book in blue. Back to 1999, you can see the price to sales in white. We are, what is that, about a 40% premium to the 1999 bubble. So yeah, valuations are high. I think we know that by now. And this chart struck me. I couldn't quite believe the scale for a second. This is the NASDAQ 100. So we know about the NASDAQ, the tech index. This is the top 100 shares in the NASDAQ 100. So all those tech titans, including Tesla. And you can see in 1999, the NASDAQ 100 was at about 4,000. Today, and that was the peak of the tech bubble, 4,000. Today it's at 16,000. Okay, that gives one pause for thought. And very similar characteristics in the market. This is a chart which shows you the proportion of growth stocks, those kind of tech stocks, with no earnings or losses. The proportion of the market of growth stocks with no earnings. So 1999, you can see 60%. 2007, that peak, what is that, 40%, and today almost 70%. 70% of those growth stocks have no profits. Again, quite startling. And what's been driving it? Liquidity. We know that the Fed's been pumping money into the market. This is household ownership of US equities. That money from the Fed has been pouring into the equity market. Bigger flows than we've ever seen before by multiples. Again, 1999, household ownership in US equities was about $10 trillion. Now it's almost $30 trillion. When that happens, the market goes up. And look how vertical that line is. It's gone from 15 to 30 during the pandemic. All that Fed money printing ended up in the market. And people have also levered themselves up. This is a net borrowing against stocks in US brokerage accounts. So not only has the money gone in, but they've levered it up as well. So again, looking back, I mean, the last peak was 250, 300 billion. Now it's $500 billion. A lot of leverage in the market. And we got a couple of warning signs. The breadth in the market, that's one thing we look for. The more narrow the market gets in terms of the leadership, the more worried one gets because more and more shares are not going up anymore. This is the percentage of New York Stock Exchange stocks trading above their 200-day moving average. Trading above their 200-day moving average. That's a key indicator in terms of momentum. And you can see the percentages has come off a lot. It's almost collapsed in terms of the breadth of the market. So very narrow market leadership now, which is also shown in that NASDAQ 100 chart previously. That's a warning sign. And we've talked about China quite a lot in the last couple of sessions. We'll talk about that again in a moment. But in terms of what's happening in the market in China, this is a chart which shows you high yield credit. So credit lent to junk bonds or junk companies, those with poor credit, so high yield credit spreads. And that's the spread of the high yield credit compared to a government bond. And that's a measure of stress in the market. So right now, what is that? Almost 2,500 basis points above government debt. The previous peak was about 1,000 basis points. So, you know, they are selling at pretty distressed levels right now. That's partly the Evergrande problem in China, the property problem. So again, you've got stress in one of the biggest markets in the world right now. Let's talk for a second about one of the great exuberant stories, which is Tesla. Tesla's rise in value over the last 12 months has equaled the entire market cap of Berkshire Hathaway, which is Warren Buffett's vehicle. So it's gone up by $600 billion, which is the market cap of Berkshire Hathaway, to get to $1.2 trillion. It hasn't produced that many more cars. And look at this chart in terms of what the profits actually are. Good reminder, Berkshire Hathaway is actually the most profitable stock in the entire entirety of the US market, probably the world actually. I hadn't clocked this. So Berkshire Hathaway generates earnings of close to $150 billion a year. Apple, $120 billion. Now, these are big numbers for all the tech names if you look down that list. Oh, by the way, the slides are there if anyone wants to download them. You're most welcome. Tesla, $7 billion compared to $147 billion, and its market cap is twice. And I think we know this chart, Tesla now is capitalized at more than all of the other car manufacturers combined, including Toyota, Volkswagen, Daimler, GM, Ford, more than all of them combined. And excuse me, take a moment to compare them. Market cap on the left, vehicle deliveries on the right. Okay. Traditional car companies, market cap, $505 billion. Electric car companies, I'm a fan of electric car companies, by the way. It's just got a little overblown near term, I would say. Electric car companies, 1.3 trillion. Tesla, Rivian, Lucid. Vehicle deliveries, 22 million. Traditional Ford, etc. 0.5 million. I get this is all about the future deliveries. I get all that. I get it's a technology company, but again, a little bit too much exuberance for my liking. A bit of a classic is Rivian, which was the first to market, first to design and build, but not deliver yet, a pickup, a bucky. Pickups are the most popular category of vehicle in the States, and they've designed an electric pickup. It's the Rivian. This is kind of a joke P&L, but it's almost close to the truth. Revenue is nil. They haven't delivered a car yet. They don't quite know how they're going to do it. They have got an order from Amazon, but they're not quite sure how they're going to do it. Actors hired to play, I'm not sure that's really true. Executive salaries, I think, is pretty true, $125 million. Investment banking fees is not $2.5 billion, but it is $170 million. Net profit, very negative. So, and that company is capitalized at $150 billion. And this is the rub. This is a little survey on Twitter. Which electric vehicle would you consider to buy? Which one would you buy? The Audi EV, the Porsche, the Mercedes, is the high-end stuff, obviously, or the Tesla. And the point about this is that the normal car companies are catching up. They're all launching their electric vehicles. And when they do, people will choose the Ford 150 pickup. Lightning, it's called. Ford 150, the best-selling pickup in the States forever. They've now got electric versions, Ford 150 Lightning. People will buy the Ford as opposed to the Rivian. Or people will buy the Audi as opposed to the Tesla. They're equally ranked. So it's about electric vehicles. It's not just about Tesla. All right, COVID. Quick update. Important. This is the state of play today. The UK continues to have a massive number of cases. No real mask wearing. They're just getting on with life, it seems, until now. 65,000 cases per day. That's a lot. European Union has exploded. We'll come back to that. Brazil, and then South Africa at the bottom. We are doubling every day. It's 8,500 as of yesterday. And it was, 200 about 10 days ago. 8,500 now. So we are going up a lot. But we're still, dare I say, modest compared to some other places. But this is the problem. This is the Omicron variant, or the B11529, as it was known when this chart was published. And this is the percentage of all cases which are the new variant. Okay? And how quickly it happens. So you've got the beta variant, the delta variant. It took, 50, 75 days to get to the dominance of that variant. Omicron is dominating within like a week. So 90% of the new cases are all Omicron. This is what they're worried about because it's so much more transmissible. And this is why South Africa is back in the naughty box, unfortunately, even though we discovered it and shared it with the world, and we're being punished for that. It is happening very quickly now. Vaccines, will they work? I suspect they'll find a way, and it'll happen fairly quickly. Just to remind you, normal vaccine development is 10 years at the top there. Fast track COVID-19, this is what some people are worried about in terms of vaccines, happened very quickly, it's 1 year. The mutation in the variant to design a vaccine and deliver it for that, 82 days. That's what they're saying. So very, very fast. And the RMNA delivery mechanism, which alters your genetic code, is very easily altered to allow for a different variant. So vaccines will be here, I think, fairly soon. And the vaccine is called Omicron. Just to remind you probably know this because it couldn't be called Nu. This is the third line down on the left. It couldn't be called Nu because the next one was Z. And President Xi is the president of China. And there were all kinds of speculation they're going to call it President Xi. So they just skipped it and went straight to Omicron. That's why they did that. Thank you, Greece and the Greek alphabet. A note on vaccines. I'm not going to make any pro or anti points here. I'm just going to point out a couple of facts. It is, or certainly does look like a fact, I think it is a fact, that the more vaccinated a country, the less the new cases coming through, and certainly the less hospitalizations. So if you can see the infection rates on the left, Austria, Slovakia, Czechia, Netherlands, Belgium, and on the right, vaccination rates in selected European countries. And at the bottom, Slovakia, Czechia, very low vaccination rates, very high new cases. And if you need it spelled out a little bit more, the next chart will do it. Percentage of adult population vaccinated on the left. At the top, 93% vaccinated. I think I might be Ireland. And number of deaths on the right. Lower vaccination, more deaths. It's just a fact. I thought this might amuse you. This may be why we got fewer slides than normal. My hopes for a productive webinar weekend, and then South Africa play, and Wales for that matter. Couple of science ones. This is interesting. A brain implant has given a blind woman artificial vision for the first time. So this is good science fiction stuff. We can now cure blindness on due course. We can. We've got the first indications we can. We will be able to cure blindness. That's cool. Oh yes, and then lastly, before we get into the trends, on the metaverse, Nike's has opened its digital showroom in the Roblox metaverse, and they did that 2 weeks ago. And they're spending many millions of dollars buying the land and developing the land into games areas, into merchandise areas. And the land grab for real estate in the metaverse right now, we talked about this last time, is insane. I've been talking to a lot of people. I'll come back onto that. This thing is exploding. The metaverse being the 3D digital parallel universe, which will have it as avatars. In case you don't know yet, I'm sure you do. Okay. Wow, trends for 2022. We'll see if we get these right. I've got 5 here. Number 1, we're getting into each. Chinese quest for global dominance accelerates. That's an important one. I'm going to be contentious. I think China is on the verge of being uninvestable. Number 2, exponential technological progress accelerates. We talked about that quite a lot. Have exposure to those dominating themes. We'll get into that. Crypto evolution, everything's accelerating. This is exponential growth. Crypto evolution accelerates and rationalizes. There are massive coins now. It'll rationalize, and you need to back the winners, one of which will be Ethereum. ESG will accelerate. Green tech will accelerate. That has all kinds of implications for next year. Decarbonization. And then higher inflation. Thank you, Jay Powell, for finally waking up. We will have higher inflation, and we will have higher interest rates. You need to protect yourself from those trends. All right, I did a bit more digging on China. We'll spend a little bit of time on that. It is quite, what's the word? It's quite scary what's going on. Actually, we talked about Chinese nationalism, the shift to socialism, the interference of tech companies, the ownership of personal data, and the move very quickly to a full-on surveillance state through CCTV cameras and monitoring of social media and social credit scores. That is happening. It is the Chinese way. It is the model of socialism they embrace. And then is the global dominance theme, and that's what I want to talk about here. The Pentagon published a report on this just about a month ago. The headline was the number of nuclear weapons that China was developing, which is much higher than the world thought. There were a number of other nuggets in there, which I will share with you, because I read the whole report. That's what I do. I will read. The People's Republic of China, PRCs, so China's strategy aims to achieve the great rejuvenation of the Chinese nation. We talked about this last time. The return of Chinese dominance globally as the dominant global power. That is the aim. They identify a clash of opposing ideological systems, viewing the US as increasingly determined to contain China and creating potential obstacles to its strategy. PRC's, China's, leaders are increasingly willing to confront the United States, quote unquote. This is the Pentagon. That's the opener. And how armed are China? Okay, well, it tells us. You'll have to squint at this slide. This is the naval capacity on the left and the air capacity on the right. I'm spending a bit of time on this because this will be one of the defining trends of our age, in my opinion. The naval capacity on the left, China is dominant in this part of Asia, the southeast, southeast and East China Sea, and also now has numerically the largest navy in the world, with 355 ships and submarines. It's launching its second aircraft carrier, which will project power into the rest of the world, I think in the next couple of months, and it'll launch 2 more next year. So that projection of Chinese power into the rest of the world is now happening, as well as the dominant naval presence in that region. The Air Force on the right is the largest air force in the region, certainly outstrips the US, and is the 3rd largest in the world. 3rd largest in the world with 2,800 aircraft, and is growing. They are also engaging, which I didn't know fully, in a full biological weapons program. And there's a lot of detail here, which I won't share, but there's a full biological weapons program happening now in China, which is very well advanced. And as we now know, the nuclear capability is accelerating at a much faster pace than what we thought. China likely intends to have at least 1,000 nuclear warheads by 2030, with 700 in place by 2027, exceeding the pace and size the Pentagon projected in 2020. These charts show you how far they can file. It's kind of an upside-down view of the world over the North Pole. And the one on the left identifies where the US is. It's on the top right of the slide. So look at the left, the conventional strike. The US on the top right over the North Pole is kind of just about in range. Russia's, of course, in range. The whole of Southeast Asia is clearly in range. And then the one on the right, the US is directly above China. So again, over the North Pole. And China can now hit with a nuclear missile any part of the United States it wishes. Okay. And it has an enormous number of missiles already in place, with hundreds and thousands capable of that length of trajectory. So that's the extent of its nuclear expansion. It's also, by the way, put in place a worldwide satellite navigation constellation. Worldwide satellite navigation constellation. So China now can spy on you from anywhere in the world. I didn't know that. It's also, this is really interesting. This came out as well about a month ago. It's launched the first hypersonic weapon system, okay, using a hypersonic glide vehicle. Okay, so the hypersonic glide vehicle is capable and actually does now fly all the way around the world at 5 times the speed of sound. Okay, it's doing that right now. And it carries on it ballistic missiles. Now, while it's traveling at Mach 5, it fires the missile. And the Pentagon cannot understand how physically it's possible to do that. The US has not mastered this. So because something flying that fast, if you open up a chute, it destroys the aerodynamics. But they managed to master this and can fire a missile while flying that fast. So they can fire missiles anywhere they want in the world at any time. And the Pentagon is still trying to work it out. This came out last month. Last bit in China. This is why it was quite scary reading that report. Of course, the flare-up will be in the Taiwan Strait. China, as you know, we talked about it last time or the time before, maintains its own jurisdiction over Taiwan. It still treats Taiwan as an extended province of China and wants to reclaim it. And all kinds of noise in terms of reclaiming, potentially by force, Taiwan. Taiwan is an independent country, a very well-established technology hub, and China wants it back in the fold. And Taiwan is very close to China and very easy to do. Very easy to reclaim. Let's see what the US does about that. Let's see what Japan does about that. Defense budget. Okay, so China's spending, it's gone up from $100 billion a year on its defense to $200 billion a year in the last decade. Those are the bar charts. Growth is the line chart, but the bar chart's the important one. $200 billion a year. US defense budget is still $700 billion a year. So it's still spending a lot more, but China is spending $200 billion and spending in the right areas. Hypersonic missiles we just talked about. Space we'll talk about right now. Satellite surveillance. And all kinds of unmanned vehicles, including drone technology. And we talked about this before, the Belt and Road Initiative, which is the soft and hard power land grab China's undergoing, to reignite the ancient maritime Silk Road and the land Silk Road. And China, to remind you, was the dominant world power for most of its 4,000-year history and used these trade routes to dominate the world. And it is lightening them up again by investing $8 trillion between now and 2049 on various forms of infrastructure, mostly through loans, which can't be repaid back, and they grab the equity, be it in a port or a rail line or a gas pipeline. And these things go all the way to Africa, obviously, but also into Greece, through Iran, through Afghanistan, into Moscow, and into Venice, and into Rotterdam, right into the heart of Europe. This chart is the Chinese domination chart. Okay. In addition to this, there is now, quote unquote, a polar Silk Road, which is a Silk Road over the North Pole, which China will, again, aims to dominate and light up. By the way, this hypersonic missile I talked about before, the other thing is Fox the Pentagon. The US defends itself against China in terms of anti-missile capability by the North Pole. So that's the obvious route. China just flies over the North Pole of missile, the US shoots it down. That anti-missile defense is pretty good from the States against China over the North Pole. What the hypersonic missile and glide field allows China to do is go over the South Pole. This is extraordinary. The US has no defense over the South Pole at all. They really weren't expecting this. This is new news as of a month ago. They were not expecting this. China can now fly missiles through its glide vehicle over the South Pole, or under the South Pole, and into the US. That's the Polar Silk Road. It's part of this initiative. And finally, there's a Belt and Road Initiative for space. It's called the Belt and Road Initiative Space Information Corridor, designed to build China into a space power in all respects. Quote unquote, the Pentagon. All right, I think you got the message. This is happening. It's happening fast. Be prepared for a very dominant China in the next year and coming years. All right, let's get into other stuff. Oh, and finally, sorry, all the while, surveillance state. Peng Shuai, a very well-known tennis player, it turns out, is still unaccounted for. She accused one of the previous vice premiers of sexual harassment, probably not a very smart thing to do, and she was taken off the streets. That was 2 months ago. This is like taking Serena Williams off the streets. And she hasn't been seen since. She's put out communiques, but under duress, apparently. The West are trying to force China to prove she's alive and well, and they are not doing so. This is the world where we're moving into. Okay, now it is enough on China. Technological trends, this is exciting. I've identified here, in my opinion, the great technological trends for the next decade. There are more, like electric vehicles, which aren't even on here. I'm not going to go through all of them. Highlight a couple. And as you know, we're launching a fund. We will get to launch this fund, the Applied Intelligence Fund, the AI Fund, which will capture all these trends in one vehicle for you with global exposure. I'm kind of waiting for the euphoria to come out of these areas, to come back, and we can buy at a decent price, which will be, more into the first half of next year. So once we get a good entry price, we'll launch the fund and everyone get exposure to these very exciting trends, including the metaverse. I've got to tell you, this is the most extraordinary and fast-moving and intense thing I think I've ever seen. the amount of activity in the metaverse space is mind-blowing. The amount of money going into it, the real estate being bought in the digital worlds, the NFT artworks being bought, Nike moving in is one just very small example of many, many others. This is happening. This digital world is happening, and it's happening awfully quickly. So metaverse will be massive next year. It's already massive now. It'll become kind of widespread massive in terms of people's perception. Based on the blockchain, that's going to revolutionize our lives. The opportunity for governments to shut down the crypto revolution, I think, is probably gone. It's too late. Cryptos are just everywhere now, facilitating all kinds of transactions. So that'll be massive. Life longevity will be huge. Biotechnology, nano technology in terms of nano robots sorting your innards out, allowing you to live forever. Escape velocity for forever life will be 2030. That's the point at which, by living an extra year, the life expectancy increases by a year during that year, on average. To a factor, you get to live forever. That's the escape velocity for life, 2030. It's going to be massive. Cybersecurity, given all I've talked about, China's massive in cyber attacks. Cybersecurity is going to be very big. And the last, yes, space exploration, probably the last one I'll highlight. Space exploration, asteroid mining to secure those rare earths and green metals needed, and they will build spaceships and space hotels in space from space using asteroid mining. That's what Elon Musk is really about. And finally, keep an eye on hydrogen as an alternative to battery technology in large vehicles. That's just coming through now. That's really interesting. Technological trends accelerating, exponential. Part of that is crypto. That's the third trend. Crypto is here to stay, in my opinion. It's going to rationalize. We're going to identify the winners. These are the winners of the last year. Okay, worth looking at this briefly. A value of $1,000 invested 1 year ago. $1,000 1 year ago, if you put it into Shiba on the left, would today be worth $740 million. I doubt that's ever been done before in a year. If you put in Axie Infinity, which is a play to earn game, which is exploding in the metaverse, you'd have got, what is that, $1 million? Still pretty good. And then you get down to Telecoin, Polygon, Solana, which is an alternative to Ethereum, a Dogecoin, which is the Musk coin, which has no efficacy whatsoever, Cardano, Polkadot, Ethereum. Okay, it's gone up tenfold. Very nice, but not compared to the others. And then XRP, which is Ripple, and then Bitcoin, which has gone up fourfold. The point of this chart is that identifying the winners will be important. One of them, I'm pretty confident, will be Ethereum as the bedrock for pretty much all the blockchain processes. On all these other exciting ones sit on top of Ethereum. They all use Ethereum, be it NFTs, be it metaverse, be it gaming, be it processing, be it anything blockchain, it's all Ethereum. So you have to buy Ethereum to participate in that process. And it's like a commodity. The more you buy, the more it goes up. It's actually as simple as that. So Ethereum is your bedrock. And then I'm looking right now at gaming cryptocurrencies. So gaming is becoming enormous in the metaverse. There's a cryptocurrency attached to each game, be it in Decentraland, which is Mana as the currency, or be it Axie Infinity. There are many others. So you need to identify those themes within the crypto and metaverse world and benefit from them. But if you don't want to do all that heavy lifting, then Ethereum is your base case. That's the play. All right, that's crypto. And I spent 5 minutes on carbon emissions. This is quite an interesting area. Then I'm going to finish on inflation. Okay, this is an interesting chart. Okay, China, emitter of carbon, 14 gigatons of carbon dioxide per annum, 14 gigatons. On its current policies, not much happening. To be 1.5% compatible, 1.5 degrees, compatible, it would have to go from 14 to 8. 1.5 degrees compatible is a safe world. Yeah, that's the blue line. China's not going to go from 14 to 8. That is for sure, because it's still growing very fast and actually needs the coal. It's investing hugely in renewables, by the way, and green technology, but it's not going to get to that kind of carbon emission level in that time frame. The United States probably will. That looks pretty good. European Union looks pretty good. If you put the United States and European Union together, you get about 10 million gigatons of carbon dioxide, which is less than China, However, to be fair, the population of China is twice the US and Europe combined. So per capita, the US and the European Union are still higher emitters than China, to be fair to them. I'm not often fair to China, but there you go. All right. This is the revolution, the falling cost of renewable energy. Solar is the startling one. In the last 10 years, it's gone from 378 to 68. Offshore wind has come down. Coal is kind of flat. Onshore wind, of course, has come down. Nuclear has gone up. To reiterate, we are going to need baseload. You can't just have wind and solar. You have to have baseload, and nuclear is your baseload. If you take away coal and gas, you've got nothing left. You've just got nuclear. So China's investing in 150 new nuclear plants in the next decade. The US is ramping up its nuclear energy program. So uranium as the fuel for the nuclear stock and nuclear energy, uranium has gone up and will probably, dare I say, continue to go up. That's a nice trend to play for the next decade. It's what we'll be looking at within the AI fund. So nuclear baseload and then renewables, massive investment because they are cheaper than fossil fuels now, which is good. And the world and corporates are big into decarbonisation now. This is a number of earnings calls mentioning carbon or something associated with carbon, obviously exploded. Everyone's talking about decarbonisation. At Old Mutual, we were talking about decarbonising our portfolios. It's a very important thing to do and move away from fossil fuels in a sensible way, which solves your environmental issue, but doesn't destroy your social fabric, because a lot of people are employed in this industry, particularly in South Africa, by the way. So that just transition is very important when you're decarbonising. The other thing which is happening, which we talked about before, is that the world all of a sudden is looking to decarbonise very quickly. And we're sucking capacity out of fossil fuels, so they're not investing. So the price of fossil fuels is going up. So that's a problem because it's happening too quickly and renewables aren't coming through quickly enough to replace the fossil fuels. So it'll take time for the renewables to come through, and we'll have an air pocket where we're starving fossil fuels and renewables aren't coming through. So fossil fuel pricing is probably going to keep going up. So that's an issue we're going to have to grapple with, because no one is managing this transition at any kind of global level. So decarbonisation is a big thing. It'll continue to be a big thing, and it'll have all kinds of repercussions. One of which is this. Where do all the green metals get produced? So the things you need for electric vehicles, the things you need for wind turbines, the things you need for solar panels. Copper at the top here, nickel, cobalt, rare earths particularly, and lithium for batteries. 60% of the rare earths in the world are found in China. 70% of cobalt is the Democratic Republic of Congo. I'm not sure about the governance processes there. Nickel is found in Indonesia, copper, Chile, Australia, a lot of lithium. And look where they're processed. All of these things are processed in China, basically. Rare earths, all of them. Lithium, most of them. Cobalt, almost all of them. Nickel, most of them. Copper, half of them. All in China. So China has a stranglehold on the world right now, geopolitically, just through this chart, as we move to these green metals. That's going to be part of the mix. And look where Russia is. Oh, you can't see this. The red bar this is on the left, the world's richest countries by natural resources. Who's got the most natural resources? Answer, Russia on the left. The next is the States, the next is Saudi Arabia. Russia's got twice as much as anyone else. Look at Russia's debt to GDP ratio. It's collapsed. It's kind of 10% of GDP. The US is back to 100%. We can't afford anything in the West. This is an opportunity for Russia and China to come to dominate the conversation through resources, through green metals. That's going to happen. That's going to be a big geopolitical shift. Okay, finally, we've got a few minutes left. And I had a few questions. I can answer one on Ethereum. Okay, inflation I've been harping on about for quite a long time. It's coming through. This is the chart of 2-year treasury yields, which is the likely interest rate in 2 years' time in the States. That's gone up from 0.2% to 0.5% in the last month. So the market's finally saying, okay, inflation is an issue, interest rates are going to have to go up. And Jay Powell has recognized it, the Fed has recognized it, and they're pulling back their money printing, which is going to affect the markets, and they will hike earlier than people think. People are still thinking second half of next year, interest rates going up. That's going to come to the first half, definitely, in the States. So big shift in markets. Will that be enough to contain inflation? I'm not sure it will, actually. I suspect inflation will run further than the Fed would like. and it's probably going to have to let it run hot because it can't raise rates too much because the world is so indebted. And they also need inflation to reduce the real value of the debt load. So you're going to get more inflation than might be comfortable. So you need to protect your portfolios against inflation, certainly for part of them. How do you do that? Gold is an obvious one. Silver is also a nice one. Good stores of value, and silver also benefits as a green metal. Goes into all kinds of electrical vehicle components. Ethereum, I've talked about before. It is a scarce asset. They're not producing it anymore, and it has other efficacy, as we talked about, in terms of crypto delivery. Infrastructure and forestry tend to be index linked. Anything kind of real assets, which is index linked, protects you from inflation. So you can access those real asset type funds, and some competitors have them locally. Very interesting funds to own to protect you from a proportion of the portfolio from that likely inflation over the next 10 years. Okay, wow, those are my trends. Almost on time. I had one question here which I wanted to cover. Solana is looking at to be a lot of questions. Looking to be a competitor to Ethereum, possibly. I mean, there's always that potential, but Ethereum is so embedded now, and everyone I speak to in the industry says that, okay, I'm using Ethereum. Okay, I'm using Ethereum. Everyone is using Ethereum. Solana will be a player, but Ethereum is the first mover, has the first mover advantage, which is huge in this area, and also is improving its efficacy. So I still think Ethereum will be the play. Last one about China. China's the factory of the US. If they take back manufacturing, their pollution rates increase. So will China manufacture more? China will manufacture more, but it'll be higher end technological stuff. It won't be the kind of the clothes and caps anymore so much. And that higher end technological stuff in the green economy will be less polluting actually in terms of the way they produce it, I suspect. And they will become dominant in that technological area as well. So this exponential change this decade is actually going to benefit China, which generates more patents per annum than the US. It is a technological leader. It'll benefit China more than the US. Okay, so that is your summary for the next year and potentially the next 10 years. So China, dominant. ESG and green metals are coming through very quickly. Technological trends, exponential growth will be extraordinary, and get on the right side of those trends. Crypto, get on the right side of that. It's not too late in many of these things. This is the start of the metaverse revolution and crypto revolution. It's too late, I think, for governments to shut it down. And mind your own inflation, and just protect your portfolio within a multi-asset outcome against that inflation risk. Let's see if we're right. It's been a tough year. I think I've enjoyed it. I've enjoyed your company, and good luck for next year, and have a great break. Cheers. Bye-bye.